So it's finally time to do this. I wanted to make a full breakdown video of futures trading on a prop firm. So just a quick disclaimer, I'm only going to be reviewing the prop firms that I personally have experience with. So that's going to be Apex Trader Funding and Topstep. They both have their pros and cons, so I'm going to go through each of them, identify the pros, the cons, and I'm also going to break down the whole idea of futures trading on a prop firm, who it's for, the benefits, the drawdowns. Drawdown is a drawback, but that's, I'm going to look at the pros and the cons, and then we're going to go through it together. So the first thing is we want to talk about, why would you go with a prop firm as opposed to trading with your own capital. I'm also going to, touch on taxes, because that's actually very important, because that's going to be different from when you're trading, with a prop firm versus when you are trading with your own capital. So let's talk about first some of the reasons you would want to go with a prop firm. So we know with options, there is no minimum amount that you need in your account to trade, especially if you're using a cash account. So you can trade with as little as $1, literally $1, because even sometimes option contracts that expire the same day or are very far out of the money will be priced as little as $1. So that's all you need to get started. You don't have any kind of margin requirement. Now for futures, the only way to trade futures is on margin, which means that you have to have, we can call it like a cushion in your account, a specific amount, I think $500 probably for minis, and then it increases there if you're looking at micros. So actually flip that. So micros and then minis you need more in your account, because the minis are, essentially 10x a micro. So 10 micros comprise one mini, and we can talk about that later. But prop firms allow you to have that margin. They will give you a funded account worth, X thousands of dollars, and that allows you to meet those margin requirements and therefore trade futures contracts using their capital, quote unquote, right? It's all simulated unless you get asked to actually come on as a trader that is, I don't know what they call it, whether it's a live account or something like that, but I think you need to be with the firm for a good amount of time, show consistent profitability, and then they'll select you to do that. So first, that thing that we touched on is, if you don't have or you don't want to risk the upfront capital to trade your own account. And when we get to taxes, this is important, because if you trade with a prop firm, I know for example Apex will actually treat you as a contractor. So you're essentially working for them. So they'll give you a 1099 when you're done for the rest of the year, so that when you file your taxes, you're actually being paid, that income is being paid as if you're an employee of the company. So you're a contractor. And so that's going to be taxed based on your, your individual income tax bracket. You need to pay employment tax, things like that. Whereas if you're trading futures with your own capital, you're subject to the 60-40 rule. So the 60-40 rule, now this could be flipped, but I believe 60% is taxed as short-term gains, and then 40% is taxed as long-term gains. And we all know that the long-term gain capital tax is much, much smaller than the short-term. Short-term is essentially taxed as if it's regular income, and then the long-term, I believe, is 10 to 15% taxes on that, so much less. So it comes down to you're going to get taxed a bit heavier if you're using a prop firm. However, obviously there are the pros are you're not using your own capital except what you pay to initially pass the evaluation and to activate the prop firm account, the funded account, if the prop firm does that. So first, let's talk about the different kinds of accounts, how they work, things like that. So for the sake of this video, I'm just going to be looking at $50,000 accounts. Now, $50,000 does not mean that you can, that's your money, that you can withdraw it, nothing like that. $50,000 is just essentially the kind of, margin that they're allowing you to use to purchase contracts. Now, what you really have in capital, one could say, is your drawdown. So kind of like a fail-safe, or something that these prop firms put into place to prevent people from risking too much, is they have a trailing drawdown or just a static drawdown. So first, let's take a look at Apex Trader Funding, right? So this is the firm that I have the most experience with, and I'm going to go ahead and jot some notes on the side. So this is Apex. So there's a few things that we need to note about Apex. So Apex Trader Funding allows up to 20 funded accounts. Okay, this is important because some people, for scalability purposes, want multiple accounts, and they can even use a trade copier to copy their trades so that they can actually, trade less but make more capital by copying those profits across several accounts. So they allow up to 20 funded accounts. So I'm actually going to, separate this into pros versus cons. So they allow up to 20 accounts, and they almost always have a sale, right? So they almost always have a sale on eval accounts. And this will typically, as you can see from below, It'll typically range from 71% to 90% off of the eval accounts. All right, got some typos here. So typically range from 71 to 90% off. So essentially this is cheaper than competition, right? So it is cheaper than the competition because they offer that. However, we're going to get into some of the different rules. So let's scroll down. We know that it's 71% off now. Last week it was 90% off. So let's take a look at the actual plan here for Rhythmic. So you can trade either on Rhythmic, which is our Trader Pro, or you can use Tradeovate. Tradeovate is nice because it has direct integration with TradingView. So if you're using your charts on TradingView, what you can do is you can actually directly trade off of the chart. Rhythmic, you would have to use their platform, which can integrate with NinjaTrader, which is a very common one to use. Anyway, I'm going to wait for this to cycle back, and then we're going to take a look at the 50K full account, which is essentially the best bang for your buck, along with the 25K, and I'll explain why. So you can see here, let's take a look at the different number of contracts. So we look at contracts, and you can see here that you have a max amount of contracts. Okay. Let's just go back here and let's click on the 50K full. Hopefully it doesn't take me to purchase. I just want to get more information here. Okay, it is trying to get me to purchase. So let's just take a look at the 50K full. So what you're allowed is up to 10 minis, which is 100 micros, as we said, because 10 micros comprises one mini, which is what you're allowed, 10. Your profit goal is $3,000, which means that you need to have a net profit of $3,000 in order to pass the evaluation. And your trailing threshold, which is a trailing drawdown, is $2,500. Now, what I look at, this is why the 25K and the 50K are technically the best bang for your buck. We need to look at the ratio of the profit versus how much drawdown, which is how much your account can pull back essentially into the negative before it gets closed out. So here we can see the profit goal is maybe 20% higher than your threshold, which is great, right? Because we ideally want 1-to-1, which means that we can go down as much as we need to go up to make that account and profit that we to hit the goal and to pass. So 25K full, that's the best value, right? And so if you're looking at managing your risk, because it's a 1-to-1 ratio of your profit versus your drawdown. The 50K is almost a 1-to-1, and then here is when we start to get higher, right? This is almost a 1-to-2, right? We almost have to. So we have basically almost half the amount of drawdown versus how much profit we need, which makes it a little bit tougher to trade. So this is why I like to focus on the 50K, because the 50K lets you have 10 contracts as opposed to 4. They're similar in price. They're similar in the ratio of your profit to your trailing threshold. So this is the most common one. You can see there's only like $20 a month difference between the two payments. And if you're looking at a 90% deal, that $167 actually gets cut down to about $16, right? So you're paying $16 if you get this at 90%. About $32 if you get it at 80%, and that's to actually just take the, you can call it like an exam, but it's an evaluation phase, where if you actually pass this, right, if you hit that $3,000 profit goal before your account pulls back $2,500, you essentially pass. However, then you need to pay an activation fee. So that activation fee, there's two options. You can pay $85 a month, which means every month that funded account is active, you'll be charged that $85 recurring, or you can opt in for a lifetime payment of $140, right? So it's almost double. However, you never have to pay another fee again on that account. Now, the only thing is, if you're somebody who's prone to blowing your funded accounts, I would actually recommend trying that $85 monthly until you start to not blow those accounts and you get some more consistency. Because chances are, if you blow those accounts, you're going to blow it under a month if you have that kind of poor risk management, and so you're not even going to incur that second $85, and you'll end up saving more money. If you are at that point where you're good at managing risk, where you don't feel that your accounts are getting blown, go for the lifetime fee. You only have to pay once, and then you can keep that account essentially forever and not have to worry about that monthly recurring. So once you pass that, you pay an activation fee. So both Topstep and Apex have activation fees, so that's like it's not really a factor because they both have those activation fees. So that is a good thing there's a lot of good things about Apex. Let's take a look at some of the cons, right? So some of the cons, obviously a trailing drawdown. Now this one can get a little bit tough to understand, so I'm going to explain the concept in a little bit of a simpler way. So it's not, your account does not need to be $2,500 below the initial balance. So it's not like your account gets terminated if your balance drops down to 47,500, which is 2,500 under the starting value. It's $2,500 below whatever your peak profit is, even on open position. So let's say my account's worth $50,000. My open position goes up to $51,000. However, we have a big pullback. I don't close out my position, and my balance drops down from $51,000 to $48,400, for example. Right? That's $2,600 below the actual initial point, the highest point. As soon as it crosses that, 48,499, right? So that would be $2,501 below my peak profit. My account gets immediately shut down. So you have to be careful there. This is why I don't like to open a large position, because any big swing to the downside, even if you're in profit a good amount, can actually close your account out below, and you're not even going to be, at that $2,500 below the initial balance. It's $2,500 below the highest point of profit. That goes away after you get past 52,501, right? So once you actually start to get past that $2,500, then it becomes static, meaning let's say my account's worth $60,000. If I lose $5,000, my account's not going to go down. However, if I drop all the way down to 49,900, right, then my account gets shut down, because then I'm actually below that, then it becomes trailing. It's kind of complicated, but once you start trading, you kind of see how it works. But that's a con, because trailing drawdowns hurt you, because open positions can actually end up getting closed out prematurely before you even, your account is $2,500 below the $50,000 balance. So that is a con of Apex. I would say that the other con is that you need 10 trading days between payouts and payout windows. So that's going to be the 1st to the 5th and 15th through the 20th of every month. What this means is you need to trade 10 days in between each payout request, 10 full trading days, right? You need to take at least one trade those days in order to even be eligible, and you have to make sure that you request in a payout window, which is the 1st to the 5th and the 15th and 20th every month. So if you hit that 10 days on the 6th, sorry, you got to wait until the 15th to request. So that can kind of slow down your progress. Additionally, there's also a 30% rule, which means that your largest profit day cannot comprise more than 30% of your total profit. So what this means essentially is that if I were to, let's say my biggest day is 3,000, my account balance of 56,000, I'm requesting a $2,000 payout. Well, most likely it's going to get denied, because my largest day consists of 50% of my entire profit, which, for them, that's a flag of inconsistency. They're saying, oh, you had a huge day and then you had smaller days. If it's a personal account, who cares, right? That's great, you had a huge day. But unfortunately, you need to maintain consistency and spread out your profits over those 10 days. So that can be a hindrance, because some days are just better to trade, right? Some days just have much better price action, and so you're likely to have much bigger profits on those days. And maybe some days when we're chopping, you like to sit out or just flip a couple contracts. Unfortunately, that can end up hurting you. And there's also longer payout windows. So longer time for payout approval can sometimes take up to 10 business days, or I guess 10 days, up to several business days, definitely more than a week to actually get approved most of the time, and then another couple days for it to hit your bank account. So the main thing here, I guess if we want to highlight the main reasons Apex is great, is because you can have a huge number of funded accounts, super cheap to get the evals, and yeah, that's the main thing, really, to be honest. So now let's take a look at Topstep. So Topstep is a little bit different. Topstep is so they're a little bit more expensive. You'll see when there's not a sale on Apex, this is cheaper. I think they're going to be similar, 70% off versus the $49 you're paying here. But you can see that it's very similar, the eval itself, right? You're seeing that you still have a $3,000 profit target, but your max position size is not 10, it's 5 contracts, so it's a smaller max position size, which honestly I think is a good thing, because a lot of people trade these evals over leveraged. So you have a smaller contract size. The profit target is the same. So you can say that one drawdown is typically Topstep evals are more expensive, just because they're not, if you're looking at Apex when they're running that 90% off sale, this is still about 3 times the cost of that. Now the maximum loss is not 2,500, it's 2,000, right? So slightly stricter loss limit, but this is kind of counteracted because there's no trailing loss, right? There's no trailing drawdown. It's just a maximum loss. I think a daily loss of 1,000, total account loss of 2,000. So that's the thing with Topstep. Now the activation fee, you can say, so the activation fee is only $149, so there's no monthly option. So if you want to go for that $85 for that month, you don't have that monthly option, and slightly more expensive than Apex by $9, not a big deal, right? So they're very similar in terms of pricing. It's not too much difference in competition. Now the real pros come down to, right, so these are the highlights of Topstep. So so it really comes down to when you're actually funded. So the first thing is only 5-day minimum for payout. However, this does come with a caveat, so each day has to be over $200 plus, right? So essentially, if you trade and you profit more than $200 on your account, then you can actually request a payout within 5 days, and there's no minimum. So if you take a look at, I mean, obviously you're going to have more than $1,000 if you hit this rule, but with Apex, for example, if I want to request a payout on a $50,000 account, I need to have that trailing drawdown plus $100 cushion in my account. So I need a balance of $52,600 in order to request a payout. Here, if I have a balance of $1,200, I can request a payout, as long as I meet that criteria. And then there's also a scalability rule, which I think is great. So you're limited to 2 contracts initially until your account balance grows. So what this does is it prevents you from over leveraging and revenge trading. A lot of people will when their trade fails, they'll go the other way and they'll just max out their account on contracts and try to make up that loss. This prevents you from doing that. You can only use 2 contracts at a time, so it helps you to mitigate your risk without you even doing anything, right? It's kind of stopping you from over leveraging, and I would say that that's helpful if you're somebody who's trying to make money quick, trying to use 10 contracts, things like that. Number one, that's going to blow you up pretty quickly, but number two, that's just not possible here, which is, over the long term, I think it's a good thing. So there's that. I'm trying to think. There is, honestly, a pro is they have a lot more, it's a cleaner website. The UI is better. If you look at the statistics they give you, they're good statistics. They'll break down your percentage wins, percentage losses, average profitability, your high, the low of the account on that day. So it's great. So that's kind of where Topstep has their advantages as well. So both of these are great. Currently, I have Apex as my main one. I have 12 funded accounts on there, and I've requested and I've received $12,000 in payouts over the last couple of months. When it comes to Topstep, however, I need one more day to hit that 200 plus. My account's about $1,300 right now. Then I can make a request. So I haven't actually gotten a payout from them or made that request. So I can't speak to that process, but I've heard that it's much quicker. So much quicker turnaround on payouts. So those are some of the pros and cons of the 2 different websites. So, if you're first starting out, what I would recommend is all of these offer simulation accounts, right? If you just hook up to their, to their platform like Rhythmic or whatever, you can trade a simulation account on Tradeavate as well, and you can kind of practice, right? Limit yourself to a certain drawdown, things like that. Reset it when you hit that drawdown, and kind of just practice. And then what I recommend is get the Apex account to start when it's at 90% off, because you're only paying 17. So you're getting a much cheaper eval, because almost inevitably, until you get the hang of things, you're going to blow a few of these evals just learning the ins and outs of them, and identifying your good system of how many contracts to take, when to close them out, things like that. And then it's good because they're really cheap evals, and then when you get the hang of it, then you can start, getting those funded accounts. Another drawdown that I totally forgot of Topstep is you have 5 maximum funded accounts. So for people who want to trade, 10, 15 accounts, you can't do that on Topstep. That would be something that you need to do with Apex. So you can see that a lot of these have different pros and cons here for both Apex and Topstep, so it just comes down to your personal preference. So that is how you, that's just kind of a breakdown of the evals versus the funded account. Now when you actually get funded, basically the same rules apply here, so they're not going to change. So what I recommend is trade your eval as if you were trading a funded account, so that when you actually get funded, you already have those habits built and you don't end up blowing your funded accounts after working so hard to get them. So that's a quick breakdown of both of these different platforms, and honestly I think that's about it in terms of that. So we can actually go ahead and I can open NQ and kind of show you a couple trades that I took today and how I took them on futures and things like that. So right now we're looking at the NQ 5-minute chart. So I'm going to identify the short that I took today as well as some scalps I took, and then I'll show you kind of how I entered and exited and things like that. So the first signal that I got here was a short signal. This was a dump here, a bearish engulfing candle after we broke this consolidation area. You'll see we had some sharp rise and sell volume all the way down here. So I wait for the close of candle and then I enter. So if I'm trading a $50,000 account, I'll only use one contract. This is important because Apex allows you up to 10 minis to trade on NQ. That's way too much leverage considering you only have $2,500 to lose, right? So I'll only enter one contract during the market hours, and during the after hours, because volatility is much less and our range is much tighter typically, I'll use two contracts because it's, I don't have as much risk there. So I'll enter one contract short here, and then I'll take my profits at the 200 EMA. So if we take a look at that move, it's about 25 points. So for one contract, one NQ contract, for every point, which is, just literally a point, right, 1.00 that NQ moves, that contract gains $20 in value. So for every 10 contracts, that's $200, or for every 10 points, it's $200. So this kind of move will net you $500 and some change on just one contract. So you can see that you don't need to use a large amount of contracts, and if you're trading ES, you could even use micros, right? I could just enter, if I don't want to make $20 per point, I only want to make $10 per point, then I can trade the micros and I can take 5 micros as opposed to, that's going to be half the value of one mini. And so this would have been about a $250-ish trade, right? So that's a good example of a trade there. Now I'm actually going to move to NQM because the contracts got rolled over. And so once I move here, it's going to get a more accurate chart, right? So anyway, this is we kind of close below here. Now the 200 EMA would have actually coincided with this level right here. But anyway, that was one of the trades. Another great trade example here is a rejection of this overhead double confluence area. So this is VWAP as well as a supply zone. This is a previous day supply, so very strong area. So here you would want to take a short there with a stop above this zone and then look for a pullback into the 200 EMA. Very quick scalp, but if we take a look at how price moves, that's 16 points, which we know is over $300 on just one NQ contract. So that's a good example of a scalp. You can see here we had a bear flag, which you could have, after rejecting this area, if you want to take the bear flag down into this area of demand. We had this little flag here. We had a long signal right there, and then we pulled back and held the EMAs and then continued higher. So continued back into the 200 EMA and resistance overlay here. And right now we're actually just trending higher. You can see that once we close back above, we've kind of been chopping around a little bit, but steady uptrend so far. So it's another example. You can also see, if you look harder, there's some really good areas where you can just bounce, or you can scalp these bounces, and you can scalp these rejections, right? So this was a rejection of the 200 EMA and the EMA cloud coupled together. You could short that into support. Once we land on the support, you can see it held multiple times. If you would have bought the bounce on that support, you could scalp a couple contracts. This was a really good rejection here of the 21 EMA as well as this overhead resistance, and we closed below the EMA. This is one of my more ideal scalps. You scalp it back down to this level here, right? It took that scalp for about, look at that, it's about 12 points. So you can just kind of scalp around. Just be careful. I typically will only use one contract. Like I said, after hours I'll use two contracts. And another kind of tip that I give people is when they first get their funded account, not to trade that day, because a lot of people get a little over excited and they want to take trades immediately on their funded account, which can be very detrimental because you get a little bit more impatient, you kind of a little bit more emotional, you'll want a revenge trade. If your first trade on your funded account is red, it makes you kind of angry. So be careful. Sometimes I just sit out the first day I get the account, and then I will just be very selective the next day, only take one contract, things like that. So that's kind of how I trade futures. There's not really much more to it. Hopefully that breakdown of the two firms, some pros and cons, how the evals and the funded accounts work, as well as payouts. Now payouts, I didn't say this, but you need to set up your payment method. For Apex, I have it direct deposit straight into my bank account, which is nice. I need to set up the Topstep one for when I request a payout later. But yeah, so that's a quick rundown. Hopefully this gave you some more clarity on futures and how to go about it, and hope you guys enjoyed this video. Thanks.